Welcome to the WuBlockchain podcast. For the latest blockchain and crypto insights, subscribe to WuBlockchain on YouTube and follow us on Twitter at blockchain. Stay informed and join the conversation. Hello and welcome to the WuBlockchain podcast. Today we have a very special guest, Joshua Tobkin, the co-founder and CEO of Supra. Joshua, thank you for joining us. Can you please introduce yourself and explain how Supra works?
Yes, great to be here. So my name is Josh. I'm a co-founder and CEO here at Supra.com, formerly known as Supra Oracles. Myself, I've been in making software and development for since I was 22. Even before that, even when I was 12 years old, I was trying to work on the internet, trying to figure out how these websites work. Uh, I'm 38 now, so I've been in the space for quite some time in terms of online development and building products and applications. I got into blockchain in 2017 when I was working in San Francisco. Back then, I was working in software as a service. I had a SaaS product. That product lives till to today even. I have users that are still paying for it. I don't pay any attention to that product. I have other people running it. Nonetheless, I learned a lot about product-minded and product-driven development. So back to Supra though, what makes Supra different than other layer ones, and why is it, why do we need another layer one? Well, we have a couple of major innovations. The first one is in relation to our consensus algorithm. We have a consensus algorithm called Moonshot, and Moonshot, for its type of randomized single leader rotating BFT algorithm that's kind of part of the classical consensus algorithm family. It is considered the state of the art in terms of throughput and latency. What most of the world does not know is that we've also innovated a DAG, a DAG, a directed acyclic graph called Sailfish. If you look up Sailfish DAG, it appears to that theoretically this will outperform even the latest works at Aptos and Sui. It's still in the early kind of phases as we kind of roll this out and collect data, but theoretically it's very promising. What does Super do though that's special than just a layer one? Well, we have protocols for every step of consensus and from data transmission, data dissemination, transaction ordering through consensus, and even parallel execution strategies. So that's true end-to-end kind of compression of latency. Moreover, what makes us very special is we have built-in native Oracle price feeds. We have a Oracle protocol called DORA, Decentralized Oracle Agreement, that also got into a top academic venue through a double-blinded peer review process. And Oracle price feeds on a block-to-block level. Imagine every single block has access to price feed data immediately. This is a great developer experience. And by enshrining Oracle price feeds into the blockchain itself, we can mitigate kind of Oracle extractable value and MEV, where folks are trying to do back running and so all kinds of different things to, for example, collect liquidations. The other components that we offer are on-chain randomness, so VRF, verifiable random functions. We're rolling out automation, a decentralized if this, then that, and also native cross-chain communication protocols. So what we're doing in a summary is fully vertically integrating multiple services into a smart contract platform that can enhance applications and enable them to do things you literally cannot do on any other network.
Oh, glad to have you here. And Supra started as a purely Oracle project, but now has shifted to layer one. And can you explain the reasons behind this shift and the current narrative of Supra?
Yeah, sure. So the research behind Supra actually began late 2017 when I was in San Francisco. And of course, the ideas were very different, but there was a lot of similarities also. Now, back then, the research was primarily about scaling blockchain throughput and performance. And I also had the intuition already back in 2017 that these blockchains should have Oracle so they can do more things. Now, there was a bear market from 2018 to like 2020. That was a very difficult time for our industry. During that period, we had me and my co-founder, John Jones, we created a crypto lab called Unity Chain, And when DeFi summer started to pick up, we realized we could use our insights into oracles and layer one to provide a next generation Oracle service. Now, the truth of the matter is, the whole time, there has always been a blockchain and a layer one in the background. We use a blockchain for our Oracle protocol, and we wanted to go to the market as an Oracle first because there's just so much noise about layer twos, new layer ones, yet there was only, like one or two viable oracles back then. So we thought we could enter the market focusing on the oracle problem with what we consider to be a superior consensus algorithm and protocol to solve the oracle problem. So actually, the layer one has always been there from the beginning, but we didn't want to focus on that initially. However, the vision has always been vertical integration, layer one, multi-VM support, as well as native oracles, native VRF, and so on and so forth. So actually, it wasn't a pivot. It was actually always part of the story. If you were to speak to some of our seed investors, folks like Coinbase Ventures, Hash, Animoca, we told them we're going to market as Oracle, but we will switch to vertically integrated layer one later. And we're now at the stage where that's the full focus. It is not just Oracle, it is actually layer one with Oracle.
And what are the key characteristics of Supra Layer 1? How does it compare to other high performance public chains like Solana and Tron? What advantages does Supra Layer 1 offer?
Right. So in terms of performance, our algorithms, we believe, are going to outperform both what Solana is doing as well as Ton. Now, Solana isn't a sharded architecture, whereas Ton is. Now, Super is a bit different. We're not just a single platform for only one virtual machine. We actually do execution sharding. We enable execution sharding where our nodes are randomly sampled into subcommittees called clans. So the network is called the tribe, and we can randomly sample smaller committees called clans. These clans can actually execute virtual machines. So we can run EVM, MoveVM, Solana VM, Cosm Wasm. We're going to be rolling these out step by step. So it's actually a multi-VM platform. In terms of throughput, last test we ran, we're talking about 125 nodes across 5 global regions and running our Moonshot with our data availability kind of protocol. And in that test, we were reaching throughput of 530,000 transactions per second, and also with latency of 500 millisecond optimistic finality and full finality in 1.5 to 2 seconds for transaction ordering, aka consensus. So we are also a very high performing blockchain. But in addition to that, our protocol and our stack, this idea of full vertical integration, we have native price feeds. We're designed to have native cross-chain communication, native on-chain randomness, native cross-chain, automation, single stack. So we actually have additional capabilities that other blockchains don't have. It would be almost like saying, imagine if Solana or Ton also merged itself with Chainlink. But in our opinion, in almost every single protocol, we think we have the advantage.
Wow, Supra's core product components are quite extensive. But besides the layer one, what other components are included? How do these components work together synergistically?
Right. So let's think about what's happening in the layer two world, for example. You might have one layer for execution, another one for data availability, another network for settlement. Now, extending that to oracles, you have another third-party network for price feeds, another network for randomness, another network for bridge, another network for automation. When you have different networks, disparate different networks for each of these components, you do not have shared security, right?
Right.
Moreover, you're also going to have more costs. Each of those networks are going to charge you eventually. And latency is also higher, meaning it's slower to engage multiple networks, wait for the response to move forward. What we have done is, we realize that single nodes in a blockchain setting, they can and should be doing more things. The only limitation to what a node should do is really its bandwidth availability, as well as its throughput or compute limitations. Now, computers, Moore's law, Nielsen's law, we have more compute and more bandwidth available constantly, and it's constantly growing and improving. So we know that Supra can randomly sample the nodes in our network and assign to them different type of tasks. While everyone will run consensus, one subcommittee or clan can be doing Oracle service, another one can be doing VRF, another one can be doing execution sharding, running different virtual machines, right? And what
Right.
this gives us is a shared security environment, also single token, so a better developer experience and cheaper and lower latency. So it's how do they work synergistically? Well, it's the same set of nodes that every epoch are shuffled to do different tasks. So we randomize the nodes that are doing different things periodically, but it is a single network that can be running multiple services, almost like a decentralized microservice architecture.
Right. Speak of the consensus protocol. Let's talk about the new consensus protocol, Moonshot. It recently received Microsoft Ivy Verifier certification. What is the Moonshot consensus mechanism, and how does it differ from Byzantine fault tolerance consensus mechanism?
Yes. So Supra's Moonshot consensus algorithm is a BFT, Byzantine fault tolerant algorithm. This is more of the kind of classical consensus algorithm family, meaning where you have a leader proposes a block and you run the rest of the protocol. Now, we have passed the Microsoft Ivy verifier, which means we are formally verified that this system and design will not fork. So we guarantee safety. Um, Now, what's interesting about Moonshot is whereas other algorithms that are kind of in the same family, uh, that are kind of rooted back to the traditional BFT paper by Miguel Castro, is it's other protocols have more steps in between. You have so a block proposer sends a block out. You have to wait for votes to aggregate that the block has been received, and then so on and so forth. And you actually have 3 rounds of communication traditionally before you can propose the next block. Supra has basically realized that we can, through this moonshot approach, right, we can actually propose a block in every single step of communication. So instead of one block every 3 rounds, we can produce a block every round, right? So this will lead to more throughput and lower latency. And we achieve this through various techniques. We've taken this notion of pipelining further, and we actually can decouple voting from the block dissemination. This is subtle, but what I'm trying to say is that a block might be larger, and the larger the payload is, the slower it is to disseminate throughout the network. However, votes on the block are very, very small, so they can disseminate very quickly. So we can start to propose a block and start to vote on it, and propose the next blocks and vote on it, kind of almost asynchronously, and achieve these, the properties we need to maintain safety and liveness very fast. Now, uh, in a nutshell, Moonshot for this type of consensus algorithm where a single leader is randomly rotating, we do believe we are the limit. We looked into trying to extend this to pipeline it further. It doesn't look like we can do it while maintaining the safety and liveness guarantees or formal verification. So Moonshot is a protocol that got accepted to a top academic venue recently as well through double-blinded peer review process. And in the academic circles, it is considered the state of the art for this type of algorithm. But yes, it is a BFT algorithm, and we believe this type of performance is as best as you can get for this type of algorithm.
And could you introduce the cross-chain communication protocol, HyperNova, and the cross-chain bridge protocol, Hyperloop? I've heard Hyperloop features game-theoretic security and resistance to collusion, making it the first of its kind in the industry.
Yep. So why do we have 2 different protocols for cross-chain communication or bridges? It's because actually there's a different, depends on what you're bridging to. If you're bridging to a layer 1, a layer 2, layer 3, subnet, parachain, Bitcoin, they're all different setups, and some of them are proof of work, some of them are proof of stake. To discuss HyperNova, the observation is pretty simple. Once you see it, it's very, very powerful because it's simple and it's cryptographically secure. It's also fast. So how does this work? We realize, with the emergence of proof of stake networks, the validators have to stake and register their identity in the blockchain first of all. So if we know the public addresses of the validator nodes that are voting, we can just calculate their consensus also, meaning we can aggregate their signatures and verify it on our side. So what does this give us? It gives our nodes the ability to check that the block that's provided to us from a different chain has reached supermajority agreement. We check the aggregate signature basically. So Ethereum, Aptos, these are all projects that are using BLS signatures. Supra is also leveraging BLS signatures, which you can compile them and aggregate them and condense them into a single signature. We can effectively just rerun their consensus and verify it if we have knowledge of the active validator public addresses. So if we know who are the active validator set, we can check if they have reached supermajority consensus. Similarly, Supra also, in a similar technique, we can reach a majority agreement on a payload and deliver it to another chain, a destination chain. That destination chain will be checking, their smart contracts will be checking Supra's supermajority agreement, basically. So the cryptography. So HyperNova is a cryptographically secure approach. So as long as we know the active validator set's identities, we can calculate if that chain has reached majority agreement, and therefore we can also verify it. And so that's where HyperNova comes in. Now, Hyperloop can be more appropriate, for example, for layer twos. Now, in layer twos and other networks, maybe even Bitcoin, um, they're not necessarily proof of stake. There's not necessarily an active validator set, so on and so forth. So what we do with Hyperloop, so HyperNova I talked about just a second ago, Hyperloop is also a different type of bridge that we do need to have a set of node operators that are full nodes of the chains they're interacting with, as well as a full node of Supra. Now, what we introduce are a couple of additional things. We have a smart contract on the origin chain and a smart contract on the destination chain. And what we do is we limit the amount of value that can be transmitted through this bridge to 51% of the stake of the bridge nodes. Okay. So just
Yeah.
hypothetically, let's suppose there's 10 nodes. There probably will be more, but let's just suppose that there's 10 nodes that have staked $1 million each. Okay. 51% of that is we only need 51% agreement here. We don't need 2/3 plus one agreement. We need 51%. Now, half of that, let's just call it 5 million. Now, if this bridge were to handle value beyond 5 million, you enter game theoretically unstable territory, meaning these bridge nodes, if they're responsible for, let's just say 100 million, but if they collude, they only lose 5 million and they can gain 95 million or 100 million. This is a very game theoretically unstable design, right?
Yeah.
So what we do is we introduce this notion of a sliding window rate limit, meaning for any given sliding window period of time, let's just say, 1 hour, the maximum value that you can transmit during that 1 hour sliding window period is 51% of the stake of the bridge nodes. So let's just say 5 million. Now, the thing is, in the next sliding window, we can handle up to 5 million as well. So in a 24-hour period, we can still handle like $100 million of value back and forth on this bridge while still remaining secure. The smart contracts check on both sides that the this sliding window rate limit is being adhered to. And why is this important? It's important because we can still keep it game theoretically secure while handling a large volumes of value exchange in like a 24-hour period. Once again, we can just do, let's say, $5 million per hour, but 24 hours in a day, we can handle, 100 million or plus of value. Now, there is one more component, which is what we call whistleblower nodes. Whistleblower nodes can trigger the bridge to pause if they, for example, if they say they see something's going wrong, they trigger an alert, they put up $100,000 of stake to say that, hey, yeah, there's something wrong here, to pause the bridge. And uh, why would they do this? They would do this if they see, for example, that the node operators are cheating or colluding. And then what they can earn by putting up the 100,000 to trigger the alert, if they are actually correct, they would get the 5 million stake, 50% of the stake of the node operators. Now, if they are caught cheating, causing the bridge to pause, then the whistleblowers are not telling the truth, they would lose $100,000 that they put up. So these type of mechanisms are in place to ensure that, we have security in depth, meaning where we can limit the damage the colluding node operators can handle. But also, we have smart contracts on origin and destination chain, keeping track of the sliding window. And what we have is just multiple fail faces here to multiple fail safes here. Excuse me, let me say that again. Multiple fail safes here to ensure that the protocol and bridge continues to remain low latency, high value, can handle a lot of value while remaining game theoretically secure. So that's how that works. The paper is on our website. A new version of it's coming out very soon. But we think this is a wonderful innovation because we do consider rational actors and irrational actors, meaning is this node operator just honest, or is it malicious, or is it rational? And we have a whole deep analysis around the various behaviors that they're expected to show. And we also illustrate that it's not profitable to cheat. We prove that it's not profitable to cheat in this type of design.
Yes, security and cost are major concerns in the blockchain space. Now, over 512,000 users participated in Supra's PBO community airdrop event. What's the next step for Supra? What can we expect the TGE? And what role will the token play in the Supra ecosystem?
So that's right. We do have 512,000 KYC verified participants in our Project Blastoff PBO airdrop. It's a learn to earn program. We've been running it for about 65 weeks now, so over a year. And we've been educating our community through these missions. And then we've gamified this. Because we KYC also, and we also limited the amount of people per country, we know that each of these people are individuals, and they're not bots. And we also know that there's no more than 50,000, 30 to 50,000 people per country. Coming back to the next steps, we're actually going to be rolling out our Project Blastoff version 2, which is coming soon. It's been in development for some time. And this will focus not on Supra's technology, but it'll actually start to focus on applications that are deploying on Supra, right? So we have these applications that are interested to deploy on Supra, and part of their attraction is that we have this platform, this learn to earn gamified airdrop platform with 500,000 verified users. So we can build them a marketing campaign. We can get them in front of 500,000 people to try the products. And these applications, many of them may airdrop. So we hope to get to a place where we're actually launching a new application every single week, giving that application specific missions for our audience. Our audience will continue to grow, and they'll learn about the protocol, help them launch, and then audience continues to grow. We launch the next product and service, and this should be a very nice virtuous cycle. The token for Supra is called Supra. The use case is basically like any other proof of stake network to pay for economic security, gas fees, but also it's used as what's called a work token. You use this token to access our layer 1 to pay for Oracle, cross-chain communication, automation, so on and so forth. You would use only one token. Now, Supra does plan to drive our costs down, especially for Oracle and VRF, to the minimum possible. For a while, we won't charge anything. Nonetheless, if we do decide through governance to turn the fees on, you'll have to pay for all these services through the Supra token. So instead of just gas for layer 1, you also have a single token to pay for price feeds, cross-chain communication, automation, verifiable randomness. At some point, we'll also be doing other forms of verifiable compute. We are also servicing 80 different ecosystems already. We're not charging them either. When our competitors, Chainlink and Pip, turn their fees on, we'll continue to keep our fees off for some time because we don't have to turn our fees on because we have a layer 1 itself that has block reward subsidies, so on and so forth. Long story short, the token is used as gas, There will be, Supra as a single network will have, I believe, the most utility for our token compared to any other network because we provide many different types of compute, not just layer one consensus, but Oracle and Bridge and so on.
Oh, okay. And what projects or the apps are currently being built around Supra now?
Yeah, so we have over 155 MOUs. These are um, not contracts, but agreements with many projects from a variety of ecosystems that are interested to participate on Supra. And it's specifically they want to participate in our Super dApp showdown or competition. So we're about to start our Super dApp competition. A Super dApp is an application deployed on Supra across the variety of virtual machines, EVM, Solana VM. Well, that's coming soon, but Move VM, Move language, and EVM first. If you deploy your dApp on those virtual machines and then also leverage our Oracle price feeds or our cross-chain communication or on-chain randomness capabilities, like two or more of our services, we consider that a super dApp. And you can build things that you can't build elsewhere. For example, we're talking to a couple of DEXs, right? I don't want to mention their names just yet, but why are they interested in Supra? For example, Perpetual's DEX. They're interested in Supra because block by block, every single block we have Oracle price feed data that
Mhm.
has priority. So every block has price feed data. We're low latency, high throughput. Other blockchains are low latency, high throughput, sure. But we also we'll be offering this thing called an automation network, right? An automation network is a decentralized if this, then that protocol. And our node operators can deterministically execute various transactions based off of things such as time, price of various assets. What I'm trying to say is we can actually use the automation network to deterministically execute liquidations. The combination of layer one smart contract with native price feeds with automation, for example, can enable a new revenue model for dApps, meaning these many times in liquidations, 1% of the liquidation fee will go to whoever triggered the liquidation. But if Supra's automation network can deterministically do this on your behalf, that 1% liquidation fee, perhaps, maybe 70% goes to the dApp, 20% goes to node operators, 10% goes to Supra's decentralized treasury. My point, though, is that application can now capture some of that revenue that right now, today, in other blockchains, they do not necessarily get to capture.
Oh, yes. And looking ahead, what are your long-term vision and goals for Supra?
Yeah, so we do think this vertical integration is the end game for blockchain technologies.
Mhm.
What I mean by this, we think a single infrastructure that can do multi-VM support, native Oracle price feeds, cross-chain communication, automation, excuse me, on-chain randomness, right? Single
Yeah.
network shared security protocol. We think this enables a lot of new use cases. Now, things such as layer twos could exist on Supra. There's no reason why they can't. However, we're also pioneering a new concept called containerization. Containerization are almost like layer two subnets, parachains, Cosmos zones, like app chains, but on Supra's layer one itself. I don't want to go too much into this right now, but you can find the paper on our website. It is very exciting. It's like having layer twos, but on Supra's layer one, shared security. You can have your own token. You can set your own rules. And this will also benefit our ability to parallel execute transactions. So we have efficient parallel execution strategies also. The end goal for Supra is to, constantly improve. So if there is ever a better means in which we can disseminate data and reach our data availability, guarantees faster, we'll look into that. If there's a better, like for example, Moonshot is very high performing already, yet Sailfish, right? This DAG, it itself is perhaps even more high performing. Now, the just to mention, there's kind of a, we're running some more tests on this. When it comes to a DAG, the issue with DAGs is that their communication complexity is so high that they don't tend, and we're this is what we think, they don't tend to scale well beyond like 120, 130 nodes. That's why most DAGs are under 200 nodes. Once you get to, you know, I think 200, 300 nodes, the performance starts to suffer. So what we're trying to understand is, will Moonshot or Sailfish perform better on a larger network? Because we think decentralization, Nakamoto coefficient, more nodes that have replicated full state. We think this is very important, and we think the marketplace also values that, meaning Bitcoin has a lot of nodes, Ethereum has a lot of nodes, Solana has a lot of nodes. We think that there's a premium on networks and algorithms that can handle more nodes. So right now, we are testing Moonshot and Sailfish. Right now, Sailfish seems to be outperforming the latest works, even coming from the remarkable teams at Aptos and Sui. Uh, Sailfish is expected to outperform them, but all those protocols, Sailfish, Mysticity from Sui, and Shoal plus plus from Aptos, we think their performance will all suffer once you get to beyond 200 nodes. So Supra does intend to run hundreds of nodes at any active time, like maybe 500, and have thousands of RPC nodes that are available to be or sampled to be part of the active validator set. So my point of saying all this is that the job is never done, meaning we will never say that this is the ultimate design forever. Instead, we're just going to constantly study and test. And if we find something that's definitely better, we'll slowly but surely make that the primary algorithms we use. So the job is never done. Let's put it that way.
Oh, that's so impressive. And I wonder what some of the biggest challenges Supra has faced, and how have you and your teams overcome them?
Oh yeah, there's a lot of challenges building a
Mm,
blockchain from scratch. This is not a fork, right?
mm,
And the biggest challenges are the unknown unknowns, This is why it's so important to actually have protocols go through peer review process and get accepted to top academic venues, because you have other experts review your concepts. Other challenges, of course, Supra has raised about, I think, 37 million so far. That's actually seems like a lot, but it's not that much. DeFi protocols have raised more than that, right? And our competitors have maybe on the order of 10 times more funding than we do. So that's been a challenge, but at the same time, that pressure has been very healthy for our organization because it forced us to be creative. So there's no regrets there. Other challenges are, several years ago, we had a challenge with our team. Co-founder wasn't happy. And, it's really, things get really emotional during a bear
mm,
market, right? Bear
yeah,
market, like right
right.
after FTX collapsed. Yeah, that was tough. So, we're humans too, and we're emotional creatures as well, social emotional creatures. So those were challenges as well. But in the end, really what kept us going was our team fundamentally believes that full vertical integration is going to create a lot of value for Web3. And we're going to create super dApps that can do things that other layer ones cannot do. And frankly, we've been able to survive because we're just excited about the prospects of these things, and we have the most credible and elegant design to achieve it, the best architecture to achieve this. And because it's
Mhm.
so inspiring to us, despite the pain, we're able to move forward.
Okay, right. That's so challenging. And what else
Well, it
do you,
hasn't.
mm, and what else do you want to share with us and our audience?
Sure. So, we have 500,000 KYC users. We
Mhm.
just rolled out our wallet for those folks who download and start to collect their airdrop and register their account. Now, this wallet is called StarKey. So if you go to the website, starkey.app, StarKey.app, we rolled this out last week. We already have, I think, over 110,000 downloads. And folks, this is a omni-chain wallet. It's not just Supra. So Ethereum, Solana, Alta Suite, and Supra are already there, and we're going to be supporting all the other layer twos and so on and so forth. Now, what's so special about our wallet isn't that it's multi-chain or it's great UX, which it is. What we have and what we focus on is our innovation is around key recovery. So we are bringing to market in StarKey something called split key recovery, where you can take your private key, you encrypt it with your password, we'll break it up into small pieces. You can share one piece in your Google Cloud, for example. You can share one piece locally. You can share one piece with a Guardian. You can share one piece somewhere else. And you can kind of set these permissions and a means in which you reassemble your key. So if you, instead of just random key phrases, right, the key phrase approach, which is the traditional approach, which, people leave it on the computer, they get hacked and they lose their money. With StarKey's split key recovery mechanism, we are able to provide a great UX and peace of mind. So you can retrieve your private key by, going to your cloud and speaking to your Guardian that has the other parts and maybe some other component. Plus, you need your password to reconstruct it. So this is going to be popular for just anyone in Web3. You don't have to be using Supra to be interested in StarKey. We have people leaving MetaMask already to take advantage of the key recovery scheme. Supra is led by Dr. Annika Kate, who is a very renowned, very famous cryptographer. And one of his seminal pieces is called DKG in the Wild. Basically, Supra are DKG, distributed key generation experts. And we are thinking of new key recovery schemes. And the traction has been great. By TG, we think we will have several 100,000 people staking our token. And we should probably have maybe 400,000 or more installs in our wallets. So it's very exciting.
Oh, yes, this sounds very exciting. So today, thank you so much for joining us and sharing these insights, Joshua.
You're welcome. Thank you for having us.
Okay.